Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Jay Gragnani, head of research and client engagement with Nasdaq Dorsey Wright, to discuss long-term technical trends of major markets here. And Jay, it's interesting. The middle of December through the beginning of 2022, we certainly have seen a lot of volatility. There's been no shortage of market activity. Are your indicators still showing positive trends? And has anything emerged out of the gate in 2022 that has changed any of that?
Yeah, Jill, you're absolutely right. I mean, coming into 2022, there has been quite a bit of volatility in the markets as we continue to work through virus situations, Omicron situations. And, that's certainly being a cause for some of the volatility, and then certainly in the energy markets. And so, it's been pretty interesting to watch. I mean, a lot in terms of market, just broad market perspective. Long-term trends of major equity indices remain positive. I mean, you think the S&P 500 earlier this month, actually managed to move to another high and then has pulled back off that a little bit. We haven't seen deterioration really from a major trend perspective. With that said, there certainly have been some weakness underneath the surface from a number of names specifically and a number of areas specifically. And probably the biggest area, Jill, that we've seen catch the brunt of the weakness here so far this year has been some of the more growth-oriented names. Technology, certainly a sector that's kind of right up there at the top of the list that has pulled back the hardest. Consumer discretionary stocks, a lot of the leisure, the entertainment, the service industry sector type of stocks, those have been ones that have pulled back quite a bit. And certainly some of the service industry stocks, the airlines hit hard by what's going on with the virus situation, shortage of employees to be able to man flights and restaurants and all of that kind of stuff. But that's not dissimilar in many ways to what we saw in the first quarter of 2021, where growth-oriented sectors, growth-oriented stocks in general, they just kind of bounced back and forth. They didn't really make much headway. You saw a lot of strength in value-oriented stocks in the beginning of 2021. So it's probably a little bit too early to see what's going to happen. You haven't seen major deterioration from that perspective. As technology, as growth-oriented sectors, they still remain okay from a technical perspective, but you've certainly seen some of those pull back a little bit more.
And Jay, this is what makes earnings season really interesting, because the two top performing sectors are energy and financials. We have seen that rotation trade for quite some time now, but as we're going through earnings, financial earnings, the stocks have not been responding quite as well for a number of reasons. But it's interesting to see where the flows are, but kind of how things are playing out in real time. Are you still seeing strength in energy and financials?
Yeah, in short, yes. I mean, energy is coming off of one of the best years it's had in a very, very long time. Best performing sector last year in 2021, up over double digits so far this year. That's obviously crude oil moving into the mid upper 80s has certainly been a big catalyst towards a lot of the energy names, a lot of the strength in the energy space. And yes, I mean, energy from a relative strength perspective is certainly still one of those sectors that is up there on a leadership position. Financials, you mentioned too. Financials has been very interesting to watch here over the course of the past few sessions, as a lot of the big banks have come out with earnings, reacted negatively to those earnings. But certainly, banks and financials in general are an area of the market that tend to perform pretty well, or at least perform okay during rising interest rates environments. I mean, you think what's happened with, we've seen a lot of volatility in stocks, but you've seen a lot of volatility amongst other areas like interest rates, 10-year yields going up to, in the 1.8 range. And that typically bodes well for a lot of financials, a lot of banks, financials. They're able to, lend money out at higher rates and all of that good stuff that goes along with rising interest rates. Nonetheless, they've seen some negative reaction to some of the earnings. That is right now just been a near-term noise within an otherwise strong sector that is financials, and it's a sector, both energy and financials are among the top three ranked sectors. As a matter of fact, financials from a relative strength perspective, if we look at all 11 sectors, right now is the number one ranked asset, or excuse me, number one ranked sector within our sector rankings. And that's really the first time that we've seen that for many, many years now. We have to go way back since we last saw financials as the number one ranked sector. So yes, to answer the question, financials is still a sector that we would put focus on within portfolio construction. Energy as well. Energy is certainly an area that we continue to see a lot of strength from that sector.
And Jay, to wrap up here, anything else with the Dorsey Wright indicators that we should know as we kick off 2022 that you're paying attention to?
Yeah, I mean, a lot of what we've looked at, and some, Jill, that we've talked about over the years in doing some of these videos in terms of what we're specifically watching for as it relates to some of our equity indicators. We've seen some near-term weakness in some of our individual bullish percent indicators. So we'll continue to monitor some of those, like the New York Stock Exchange bullish percent, close to reversing back down. So that's one we'll keep a very, very close eye on. Another one that very closely is an indicator that we look at is the percent of stocks in a positive trend for the S&P 500. Right now, again, that measures the percent of stocks that are in a positive trend on their respective point and figure chart. Numbers above 50% on that are typically very positive, very healthy signs for the market overall. We got to 92% earlier last year, back in 2021. That number has backed off to the mid 70s, about 74% right now. So we've seen a number of individual stocks move into negative trends on their individual charts. If we continue to see further deterioration there and see that fall below 50%, that will be a big warning sign for the market. Right now, we're still holding above 50% on that indicator to suggest that the majority of stocks in the S&P 500 are still in positive trends today.
All right, Jay, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.